when we had the last depression, which was the Great Depression back in the 20s and 30s of the last century. See, I have to be very careful because we've hit the 20s of the last century. So 1920s, 1930s, when we hit the big depression, gold and silver didn't perform really well. What did perform incredibly well were the bonds. So that's where some of the bond stuff kind of comes in when I'm talking about it. However, gold and silver seem to do incredibly well when we hit the inflation periods, which I also think is coming. Hi and welcome back to another episode. My name is Nev Kragulevich of One Deal Away, and I'm beyond excited that you are here. If you haven't watched the previous video where I talk about the overall sort of what's been happening with the markets, what I think is going on, what my thoughts are, under which premises I am operating, the link is actually right below this video, so make sure you go check it out. Also, if you are liking the videos, if you're enjoying some of this stuff, give me a thumbs up, subscribe to the channel, let me know, because it helps me understand and it helps me reach more people. Feel free to share these videos to anybody whom you think that this could be beneficial to. So, last video we ended up with what should we invest in. We understand that the market is down. It's sort of playing the yo-yo with our money. We already talked about bonds potentially being a good investment. I've already talked about that stuff. And here's kind of where I think good investment choices are going to be. So I've covered having some cash being a really good idea. I talked about the bonds in the last video and why that would be a really good idea, why that makes sense. A lot of people may wish to protect some of their wealth and holding it in precious metals. If you're going to do that, the biggest recommendation is to go with physical and start thinking of whether you want to go with monetary gold and silver or you want to go with numismatic gold and silver. There are benefits and downfalls to all of them. The monetary sort of stuff that, it's the Krugerrands, it's the Philharmonics, it's the Eagles, it's that kind of stuff, it's the bars as well. Those are the things that are easy because they're all about the same weight. The numismatic stuff is going to be the sort of older gold coinage that does have gold and or silver inside of it. It's mixed potentially with other alloys, with other metals, so it's not going to be this fine 9999 or 999 type of silver or gold, or in gold actually would be like 24 karat. But it's going to be mixed with other stuff, and that was the stuff that was money at some point way back when, whether it was the early 1900s or prior. The benefit of some of the numismatic of what you might hear is that you may know that back in the 70s, when the US decided to take the dollar off of the gold standard, create fiat currency, and fiat really means sort of by decree of the government. That's really what it means. When they decided to do that, they also legally repossessed all of the gold from the public. But they repossessed monetary gold. They didn't necessarily touch rare gold and silver coins, which is that numismatic component. So there's the benefit potential of the numismatic, but you'll be paying a bit higher premium, whereas the monetary gold, you're only going to pay spot price, right? Like, so whatever the gold is plus whatever little bit above spot price. So if gold is say $1,600, you might be paying $1,650 to get that 1 ounce, let's say Philharmonic. But if you decide to buy, 1 ounce worth of some sort of numismatic thing, it's going to be that, $1,600 plus additional piece, so it might cost you like $2,000 or $5,000. I don't know. It depends also, like, when it comes to numismatic, there's a lot of different things and a lot of different rules that exist within it, that it follows sort of the mintage, the year, the condition of the coin, does it have certification or not. So there's like all these different rules that kind of play with it. Whatever you decide to do is your own choice. My job here is just to kind of give you what exists out there, provide some education, provide some guidance, and give you options, really get you thinking about, what else can I do? So that's kind of the pieces that exist out there. There have been many people that a lot of people would call, again, smart money, that are very big and very bullish on gold as well, gold and silver. Some will argue silver is better, some will argue gold is better, some will say get both if you can't decide. Some sort of play the whole thing of like the gold to silver ratio and which one you should get. So you can geek out as deeply as you want into this stuff. But the bottom line is, vast majority of them have been saying you should have some portion of your wealth, some portion of your portfolio inside precious metals. Now, precious metals, when we had the last depression, which was the Great Depression back in the 20s and 30s of the last century. See, I have to be very careful because we've hit the 20s of the last century. So 1920s, 1930s, when we hit the big depression, gold and silver didn't perform really well. What did perform incredibly well were the bonds. So that's where some of the bond stuff kind of comes in when I'm talking about it. However, gold and silver seem to do incredibly well when we hit the inflation periods, which I also think is coming. It just might not be the first thing that shows up. So that's kind of thing to consider. The other piece that a lot of people have been talking about is probably one of my favorite assets out in the world, real estate. But when it comes to real estate, people talk about real estate as if it's like a cookie, as I like to call it. And, real estate, it's not like just a cookie or just a box of cookies. It's like an entire aisle worth of cookies. It's like you walk in and there's all these different subcategories underneath it that exist. And so real estate is localized, so you have to pay attention as to where, because you can't just say real estate, like where exactly. So you want to focus on the location, okay? You want to focus on the type of the property. By type, I sort of mean, is it industrial? Is it residential? Is it multi-use? Is it, hospitality? Is it medical? Is it retail? So there's all these different subsections of real estate that exist out there. Now, because of the COVID-19, what you likely have seen happening and developing is that more and more things are moving online. Right? So schools are starting to move online, right? Like people are having classes online. Companies all over the place are asking their employees to go home and work remotely. So they're all working online. And so we're seeing, this online movement has started probably at the invention of internet way back when. And, we've seen it sort of creep up and grow and develop. What I think is happening right now, thanks to the virus, or because of the virus, however you want to look at it, is that more folks are being asked to work remotely, which I think the online services are going to explode in the upcoming months, potentially even years. And so right now, kind of this is what ends up happening, right? You wake up in the morning, you sit in your car, you drive over to your workplace. On the way to work, you might sort of take a sharp right turn or sharp left turn, depending where the coffee shop is located. Stop in, get your coffee, get your breakfast. You might make a few different stops, maybe a gas station, fill up, maybe get some bubble gum, maybe some soda or coffee or whatever it is that you end up doing. And then you get to work and then you sit in some sort of office or cubicle and then you kind of go back, and a lot of the work is done online anyways, but you're just sitting over there doing your thing, and then on the way back home, you kind of do the same thing. Maybe you don't stop for coffee, maybe you stop for drinks or pick up dinner and that kind of stuff. Where things are going to start happening that we're going to see more of, and here's where some of the concerns and potentially warnings come in, but also opportunities and thinking, is that, you'll wake up, and because your computer is going to be located in the room next door or in your living room or maybe even in the bedroom, or if you're in a studio in the same room that everything is located in, you're going to wake up and you're going to be like, I'm not sitting in a car driving to the coffee shop just so that I can get it. I think more people are going to start making coffee at home as well as breakfast. So you're going to drink your coffee at home, you're going to eat your breakfast at home, your car is going to sit on the driveway or the garage depending on where you park it, and you're going to go in, open your laptop, log in, and you're going to keep on cranking and doing stuff. When you get hungry for lunch, you may order in, you might not, you might decide the fridge is right there, I'm just going to go eat, come back and you're going to keep on working. At the end of the day, well, guess what? You're not driving everywhere, so you're not, again, traveling all over the place, stopping. So what I think is going to happen is that some of the businesses on our commute are going to suffer because they're not going to see as much traffic, and potentially they've already been suffering a little bit. I think they're going to be in a world of hurt over the next few weeks, maybe even months, perhaps even years, if this develops that I think the way that it's going to develop. Here's kind of what I think is going to happen. A lot of the businesses, big part of the business, whether for-profit or not-for-profit, is of course to remain profitable, is of course to be able to fulfill your mission. And so part of that also comes in with increasing productivity and profitability and reducing the expenses. Physical buildings are very expensive to lease, to own, to maintain, a whole 9 yards, right? Think about it. You are a big employer. You have to have this large office building. You have to have all these different cubicles. You have to pay for the electricity, for somebody to come clean it, for the heating, for the cooling, for the water, for the trash, all these different things. Then you also have a parking lot. Somebody has to plow that. Somebody has to clean that. Somebody has to maintain that. So all of that stuff has cost, a lot of the cost associated with it. What I think is going to happen is that folks are going to be working from home, and a lot of companies are going to realize that their productivity, more likely than not, didn't go down or didn't even stay static. It actually went up. And the reason that I think it's going to go up is because at work, what happens? You go in and maybe you're sitting over there, and then somebody comes in and chat with them. Then you go to the water cooler, you get some water, you chat with somebody else. You go stop and say hi, you go check on somebody else, you walk over. We lose a lot of time in work when we are at work and we socialize. And a lot of people enjoy going to work because they love the people that they work with, and so they get their sort of social fill from being at a job, right? What's going to happen is that you're going to be home alone, or maybe with a spouse, but they might be in the other room doing the same thing that you are doing. So you're going to be working on some of those things. And again, I'm assuming that your kiddos are not going to be, distracting you too much, and that you're going to kind of figure out the way of like, how do I manage them and manage all of this stuff. But I think productivity is more likely than not going to go up. When companies realize that they can actually keep the same level or higher level of profitability and productivity, and they don't need this giant thing that was costing them a lot of money, I think that a lot of businesses will start basically selling off their assets, will start pulling out of their leases, and we're going to start seeing even more so. We've already started to see that, and if you really pay attention wherever you are, you're likely going to see it. But we're going to see a lot of not just retail, but office buildings also sort of starting to sit vacant, and you can't rent them and you can't sell them. And the prices, when there's no demand, right, and a lot of supply, the prices go down. So that's kind of what I think is going to happen with this particular space. What is also going to happen with the space is that folks are going to be very much focused on residential real estate, because now they're going to be working from home. So perhaps they may decide, perhaps I could use an office. Maybe they were in one-bedroom apartment, now they want two, because they want to dedicate a second bedroom and create it into an office. And there are benefits to it as well, because they can be tax deductible potentially. You can close yourself off, kind of really separate your personal life from the work life, and you don't have to live inside the business center, inside the hub of the large cities where you've been living right now. Because a lot of people are living in large cities, partially because of all the things that it offers, but partially because of just, you don't want to deal with the commute, right? You just want to get to work, get back home, and try to sort of reduce that commute time. Not for everybody, but for most people. So that's kind of what some of the decisions are coming in. Well, if you no longer have to drive, meaning your commute is literally you just put your slippers on and just sort of wobble over to your computer, you don't have to worry about that. That now means as long as you have good internet, good connection, you can actually live everywhere. I think with the virus, if it doesn't sort of slow down over the next upcoming months as we get closer into the summer and start hitting higher temperatures, which typically tend to kill viruses, but we don't know what it's going to do with this one, we might see that folks will decide to start moving a little bit back to the suburbs, because the home pricing is going to be less. So that's kind of where I think the long term is. I think that really real estate is still going to be poised well, and I'm talking about the real estate that actually has the power to pay you. So not just the real estate for a home that you purchase, but I'm talking about the real estate that income producing real estate, as they like to call it. And for me, I really think that housing specific components will be the components that will work really, really well. And that's really where I think that could work, because prices are lower, so you can still get them with the interest rates being cut, and I honestly believe that they're going to be cut even further. Some additional stimulus. I truly believe that at some point, if the real estate market starts to be affected by what's happening, which it might in a very near future, some of the prices might tumble. But people will still need a place to live. The key component is then going back to having some of that cash component so that you can sustain the storm and come out stronger on the other side. A lot of people have done that post 2008 crisis, where they went out and decided to get into real estate when nobody wanted it. Right now, real estate is still pretty hot. There are lots of pockets where real estate makes perfect sense still to invest in, where the prices of what is being offered and what you can get for rent just absolutely makes sense. There are many more markets that doesn't make any sense whatsoever. The key component that you really want to focus on and really think about and consider is the price that you pay for that asset. A lot of people have been getting themselves in a problem with the markets, meaning the paper assets, as well as the investments of like the physical stuff like real estate, for example. The biggest problem that they have been hit is that they didn't buy it at a good price. They couldn't distinguish of what the value versus the price that they were paying, and they were correlating the two, calling it the same thing. It's not the same thing. Markets right now, the stock market in particular, is still, even with this 35% drop, it's slightly better priced, but it's still overpriced in my humble opinion. And a lot of analysts out there, a lot of experts out there will agree with me. I think once we hit that 50% plus drop, that's when we're actually going to start getting into the fair market value for those particular equities and stocks. The same goes with real estate. I believe that a lot of real estate out there is highly overpriced and not worth the price that people are charging and demanding, and that unfortunately a lot of people are paying. The good news is that there are properties that you can buy for a fraction of the value that are being sold, and those are what is known as tax sales, tax deeds. It's basically government owning those things, and they're selling them for the amount of money that is owned on the back taxes for those properties. So now you can have a $500,000 property that is selling for $30,000 to $50,000. And that's something that is amazing because, say that you end up buying that today, right? It's March 13th today, or March 14th, I don't know. It's mid-March, okay? Mid-March of 2020, let's go with that. And say that you buy it right now, right? Today. And we don't know the certainties or uncertainties of the market. Now, keep in mind, I'm going to put this down so you can see it. So you buy a house that is worth $500,000, okay? But you buy it for, say, $50,000, all right? The market drops 50%, okay? This is no longer, quote-unquote, valued at $500,000. You can't sell it for that amount of money, but you can only sell it for $250,000. If you bought it at $50,000, you are still doing A-okay. As a matter of fact, if this thing drops a whopping 90%, you are still A-okay, because even at 90% drop, this thing is going to be valued at exactly what you have purchased. That is the key component when it comes to any type of investing whatsoever. That's what Buffett talks about when he talks about value investing, right? You find something that has this huge value, but you don't pay the full price of that value. You you pay only a small portion of it. Same goes for gold and silver, same goes for oil, same goes for bonds, same goes for everything in life, including real estate. Okay? So, key component to think through is you can position yourself incredibly well, even right now, and potentially weather the storm. Again, you're going to need a little bit of cash on the side just because there's some unknowns, there's some uncertainties, and you want to get yourself in a very good position. But what you want to do is get yourself into some of these things, because if I can buy a house for $50,000, y'all, and if I can rent it for, say, $500 a month, okay? Now, that may not be a whole lot of money, right? I mean, you'll agree with that. But you know what? If some sort of something happens with my job, because people are talking about, well, I have a safe, secure job. No, you don't. No, you don't. You might work for a company that has provided safe, secure jobs for a very long time. But with all of the markets, with all of the problems, with nobody buying, with nobody showing up, they might have potentially cash to sustain for a few months, but if this doesn't recover relatively quickly, they might have to start laying people off, and they might even have to shut the doors. So don't be going around thinking that A, you have safe, secure job, because there's no such thing, okay? B, don't be relying that you are having some sort of magical pension thing that is going to come your way, because it might, but it might not. Vast majority of the pensions, and here's the fact that you may or may not have known, vast majority of the pensions have been predicting what they can do based off of the market, based off of their returns, providing 7 to 8% return. Whether that is true or not, we have seen that it hasn't been the truth for them. They have been lucky to receive 2 to 3, maybe 5%. Last year in the stock market did fabulous, right? I mean, it had this amazing run. It has amazing run over the past few years. But right now, just where we are in 2020, first quarter of 2020, we're already down deeply. And one thing to keep in mind is that when prices drop, they go like this. When prices climb, they kind of go something like this, okay? And they keep going up and down, but it's like a very slow move up process, okay? Now, mentioned something earlier, and cryptocurrencies is another asset class that I am wholeheartedly behind believing in. And you might have seen and you might have noticed, and I have done some posts and shares and that kind of stuff about it, but it seems that cryptos are in many ways correlated with the market. And I have done a little bit of digging because I couldn't understand why that is, because it wasn't designed to do that. But with the crypto futures and that kind of stuff happening, a lot of large investors have entered, meaning these large companies that have like millions and billions of dollars that they just need to put somewhere to work, have actually put stuff in. When things started dropping inside the paper assets, a lot of them trade on margin. Margin basically means that you borrow money and you trade with borrowed money. As long as the market goes up, you are fine. The moment it starts going down, you are in problem. There are margin calls, and so you actually have to pony up the cash. So a lot of them, it seems like what they have done is they have put some of the money in the cryptos. When this started going down, margin calls came in. They sold this so that they can fund their paper assets, so that they can sustain that component, which is what caused Bitcoin, Ethereum, and that kind of stuff to actually also do a bit of a nose dive. However, because of where I think we're going with the digital currency, what I think is happening with the blockchain technology and what is able to do, I honestly truly believe that cryptocurrencies are the future of the money, and it might not necessarily be Bitcoin per se or Ethereum per se or any of the other stuff that you're seeing, but I do believe that some form of that is coming in. And I also do believe that some sort of financial reset is going to come in my lifetime. I'm in my 40s, and so, I truly believe that I'm going to actually witness that, and those that are my age and younger will most definitely witness something like that. How exactly it's going to play out is anybody's guess, but the best that we can do is start playing around with the things that we have and have control over. So I hope this is helpful to you. Please do subscribe to the stuff. If you have any questions, feel free to ask and comment. Share this with family and friends. Put the word out there, because I wanted to do this sort of really offbeat thing because of what is happening, and I'm finding that not a lot of people are taking time to explain things into details, nor sort of share what their thoughts and views are. Typically when we get those, we get them post of like, oh, this is what I did 2 years ago. You're like, gee, thanks. I could have used that 2 years ago. Why didn't you tell me then? This is the reason why I'm doing that right now, because I truly want to be able to help you out. If, for whatever reason, you are understanding how the whole value investing component works, and you are of the like mind with me that real estate is a really great deal, and you are very curious about getting into tax sales and getting into these amazing deals, please visit realestateonthecheapchallenge.com. Inside that challenge, I actually will teach you the whole thing of where to go, how to properly research it, and the whole thing lasts only 21 days, and the price is embarrassingly low. And so I think you will be super shocked to actually see it. And I believe that it's a super high value product that has a potential to transform your life, not just today, but a year from now, 5 years from now, 10 years from now, and ongoing. And so it has a lot of really cool potentials of what you can do. And I teach all of that stuff, all of the strategies right inside the challenge. I don't hold back. I give you all of the stuff that I have that I believe is going to help you to get into real estate, well, on the cheap. Until next time, stay forever money blessed. And do remember, you are only one deal away.
I want you to be happy. Don't you want to be happy? I want to be happy.